Good afternoon, everyone. I'm really excited to welcome you to this edition of Expert Speak. I'd like to introduce today's expert, Rajiv Ahuja. He's the Executive Director at RBL Bank. He brings more than 3 decades of experience in the financial services industry. And I think even more important, right? Here's someone who's been a part of the bank's transformation to a new age digital bank and is responsible for the overall strategy, including capital raising, which is very topical now. RBL raised 1,550 crores amidst COVID in 2020. We'll talk a little bit about that. He's responsible for new businesses, partnerships, and a lot more. Rajiv, welcome to the show.
Thanks, Adhil, and a pleasure to be a part of the platform. I've been actually seeing all your earlier events, and they are quite topical and very insights. A lot of insights there. Thanks so much.
Great, Rajiv. And before we get to the serious questions, you are a lifelong theatre fan and maybe even an actor. Tell us a little bit about your passion for theatre.
Well, where I was taught theatre, drama, elocution were drilled into us from standard one. I mean, and I think we all took a fascination to it, and it was a lifelong in school, and then we went out to do in college and as well as semi-commercially, and that continued for a long part of my career too. Obviously, the last 10-12 years has been engaged in other parts of building RBL Bank. But yeah, this is an area where I believe I was indoctrinated, if you want to call it, and it went into my bloodstream, and it's something which has stayed with me. And I think these are things which are actually gets you to have the balance you need over time, and everybody has some of it, whether it's music or arts or theater or writing, which is something I hope I can pick up again, as I get a little bit freer.
Thanks for sharing that, Rajiv. So to our first set of questions for today. Now, in multiple occasions, in multiple fintech forums, right, you're always feted as someone who's invested in the last 5-6 years, if not decade, in partnership. Now, this strategy to partner versus just build everything alone, right? Tell us about how the bank and you took this decision.
So, Adhil, I don't think I want to give, this was some of a need, and as well as recognition that the environment is changing very rapidly. And I mean, we started the transformation of RBL in 2010-11, and there were so many things to do, technology, marketing, structure, branding, everything. And actually, that's around the time when India was seeing the early stage of the technology-led changes in financial services. And then that became a much bigger, and that's around the time you also started, maybe around 2009-10, and you saw the adoption of simplified services by consumers and a lot of people like us. I think that's something we paused and listened to, and I would say that the epiphany was more, we listened to a lot of venture capital companies, a lot of investee companies, people like yourselves, and we're discovering that the consumption and the consumer mindset had changed or was changing quite interestingly. And around that time was, a lot of obviously headline news on fintechs will eat banks, fintechs will disrupt banks. And we were a little concerned. We said, we're just starting out in the transformation. So we started learning from a lot of these young companies and actually went and visited many of them and their investors to really understand what this is all about. And partly my prior background was I was a tech investment banker in the first internet boom of late 90s in Asia, and I had seen the movie before. Obviously, then it kind of fizzled out, but it was simmering, and I think India's caught on, and therefore we picked up the nuances and the signals. And our view was that, look, we are not going to be a bank with 25 years of vintage with 5,000 branches and a very well-known brand where our cost of customer acquisition would be lower. So why don't we partner with fintechs and even non-fintechs to understand what consumer or business insight they have, learn how they operate, learn how they build the model, unit economics, their own agility, some learning on tech. And this would be a good way for us to basically learn and not having to recreate the entire journey ourselves. And I think that was partly selfish and partly also learning from the ecosystem. And that helped us understand the changes in the environment at almost like a ringside seat. And that then became a creed within the bank that, look, the financial services structure of the next 10, 15 years is not going to be monolithic, one size fits all, people. And in your tech world, you call full stack businesses where you try to own, quote unquote, everything around a customer. And so we're very clear that some relationships, some client segments, which by nature, like deposit taking, are better suited to regulated entities like banks. But there are many others in retail, in small businesses, payments, where we cannot go and recreate the wheel. We cannot go and take 15, 20 years of work done by the larger banks and do it in 2, 3 years. So let's learn. And also, because the environment was changing, our ability to fail and experiment at smaller costs rather than spending a lot of money was extremely well served in some manner by our partnership. So I'd say those were primarily the reasons. And I can tell you today that the DNA of a large part of RBL Bank is around partnerships. Now, we may not get everything right. We may have made mistakes in the last 5 years, but the DNA of partnerships and the fact that the customers actually want the outcomes, how you deliver, how you partner, is really going to be quite fluid. And the boundaries between one entity and the other are going to be determined by what a customer wants. And I think that's something which has played out very well. And I think over the next 10 years, we see the importance of partnerships even more because the whole experience of a consumer has moved away from a branch, moved away even from a mobile app. And in a lot of ways, I keep telling my colleagues that a customer does not want to come to your branch or your ATM always. There may be transactions, they may want to come, but financing, financial services, payments, for most part, actually should happen silently behind, because your primary outcome is consumption, buying a fixed asset, buying a property, financing your business. And a bank should really be the silent, person behind. And if that could be in a partnership, all the better for it.
Yeah, well said, Rajiv. And obviously, it's part of the DNA now, and we see that in all of the relationships you built with fintechs in the market. Now, to a lot of venture capitalists, bankers, fintechs listening, you've been through this many multi-year journey of partnership. Everyone is focused on it now. It's the one thing people talk about: how to cross leverage and scale. Tell us
Yeah.
what has worked in your learnings of partnership and what has not worked, so that learning could be utilized by some of those listening.
So I think the first thing, Adil, and it's more important for a bank, is the openness. And I think we want to be very open. We want to be listening to our partners. The agenda really is how do we combine our strengths and cover for each other's weaknesses or gaps. I think that openness is probably critical, and that needs to sustain. Secondly, I think today, relative to 5 years ago, we were doing tremendous experimentation to the point that my colleagues and I must have viewed about 250, 300 digital lending plans over a period of time. And I think at some stage, we could ask 5 questions and get a more precise answer. I think that brought us to an understanding that having these conversations is important. I think it's not about the technology. So let me be very clear that technology evolves. We have learned a lot. We have learned from fintechs. We've learned from the broader environment. It's that fact that when you are doing a partnership, when you're serving a customer or a small business, the outcomes matter. Your partnership has to deliver that, and therefore each partner has to have a certain skin in the game, a certain way of actually leveraging for their own good. I mean, if a partner is not going to make money eventually, and that may be a problem because the business model is too early. In fact, one of the things we discovered was in a lot of areas we were too early, but that's part of the development model. And actually, in a partnership, if you get to discover that together, you can stop a lot of unnecessary investments and costs. So these were the learnings. One big thing, Adil, which I know is very topical right now, is governance, KYC, data privacy, transparency, fairness, services, grievance redressal. These were not words which were being talked about in the fintech, in the fintech, I would say, in the newspapers. But these have become ultra important. And I think as a bank, this is something, we are ingrained from day one. We may make mistakes. Certainly we do mistakes. But I think that's something which I believe today, that when you set up a partnership, be very clear on the governance model upfront, on outside the economics, how consumer data, clearly being a regulated entity, that's something which is our responsibility. Data privacy, grievance redressal, KYC, mainstream. So I think fintech is a mainstream theme. We have to recognize that we are touching people's lives on financial services, which is always extremely sensitive from a regulatory and a society perspective. So to me, that's been the big learning, and we found that our own development of technology, analytics, regulatory stamina, if I want to call that, has been helped over the last 5 years because of the mistakes we've jointly made. And whichever partner has been able to get over this and has the ethos of doing it has become far larger. I mean, you yourself, you are one such representative which has gone through this entire last 10 years of a lot of turmoil. I mean, and I think people who've lived through that have built a lot of internal strength around these areas of governance. I think the customer insights you guys get extremely well. The technology end you guys get extremely well. But all when you want to become mainstream and get known and maybe do an IPO at some stage, this aspect of being considered a stable, predictable, sound partner both ways is going to be very important. So that's been a big learning. Obviously, Adil, the business model evolution is something you cannot dictate. Like I told you, I mean, I think both our partner and us, we were too early in many areas. If you ask me today, maybe today, we are perhaps better positioned because the market adoption curve is far sharper and steeper in favor of these partnerships. If you'd asked me about small business lending 5, 6 years ago, it was extremely tough to do small business lending in a partnership. But today, even small businesses are being digitally driven. They have to be. So today, I think small business lending, leveraging partnerships, is a lot more exciting from a size of the market. So I think that I would say is par for the course, because I don't think anybody can dictate that. But these have been the learnings for us, Adil, over the last 5, 6 years.
Yeah, yeah, and this is, just so topical and hot off the press. This additional focus on governance,
Yeah.
really coming to the fore, given everything that's happening on the market. So if there's a banker out there, it's not only about the tech and the opportunity, but a big focus on ensuring that the governance is in place, because,
Yeah.
like you said, at the end of the day, right, the bank is the regulated entity. So we'll talk about that later. But moving to the second set of questions, Rajiv. Now, here is a bank which has strategically focused on partnership. It's part of your DNA. You're seeing a lot of success. Your partners are excited about you, right? People come to you in the top priority list when they want to do something. Now, when COVID happened, right, what happened to these partnerships?
So look, I think I would say equally the partners and us got impacted. I mean, I think all of us got impacted for the first 3, 4 months, and we were searching for a lot of questions and answers, as to how the market will evolve. How do we work to keep the partnership and the survival of everybody going? So the first 3, 4 months were quite challenging. though we were building out our tech capability and ensuring that that stood the test of time, because didn't know how this will evolve. I think clearly there have been segments which have done extremely well because they were designed for a digitally driven consumption environment, and there were segments which suffered a lot. I mean, being a credit provider, NBFCs and banks, and some of the even the digital fintech lenders have suffered a lot in terms of cost of credit because your customers were totally their businesses stopped. Many retail customers suffered job losses or salary cuts. I think those were things one had to take on a case by case basis. But I would say, Adil, that if you have a 5-10 year view, and I know that the question will be what will next year bring or the next 12-18 months bring. I think having an open communication and conversations around these issues, knowing fully well that COVID was not something which all of us were basically programmed to kind of understand and react to. I think having that open communication with your partners, knowing fully well that life will come back, businesses will come back, and as we realize towards June, July, August, that actually digitally driven consumption is going to become a larger and larger part of how financial services operate. I think we laid the ground, and I think this is something which I can look back and say has helped us keep our partnerships intact, keep our relationships going, and as well as jointly learning through this process. Because if you ask me, that the next 12-18 months is going to be a lot more positive and a lot more sharp in terms of what we do and what we don't do. So COVID has been clarifying, but how each of us tackled COVID may have been, different. But I think that after the first 3-4 months, we got the hang of it. And today, I would say we are far better. We have still a lot of things to do. Our volumes of API calls between our partners has gone through the roof. I think we're almost like 80-90% higher than we were pre-COVID across many segments. So preparing for this, this from an infrastructure, from a security, from a DR perspective has become a priority. So a lot of our plans, much like what you guys talked about, that the next 5 years have been brought forward to 9 months, we've had to do the same. And I think that's going to be a constant focus for us and many other banks and NBFCs.
Right. So, like you said, Rajiv, this has accelerated the long-term digital movement, right? And everyone went through tough times, but communication is key in any kind of partnership. But tell me, Rajiv, how does one deal in a crisis, right? Some people pull inward and they say that, oh, it's a crisis. Let me just look inward and not think about partnership now. Is that the wrong way to look at it?
I think ultimately, I don't think that's the correct long-term way of looking at it. See, again, it goes back to each institution. So I don't want to generalize, but I also want to recognize that the first 3-4 months, we were all in a state of anxiety, concern, health. Our branches were open, availability of cash, moratoriums. All of these things are preoccupying our mind. So if you ask me, were we doing constructive conversations on partners existing and new? We weren't. I mean, the first 4 months, 5 months was quite challenging. But I think as we settle down into a rhythm, I'd say the last 4-5 months have been a lot more constructive. I mean, I myself have been involved in many conversations, both existing and new, in the last 4-5 months. And I think it really has to be a core part of how you see your strategy evolve. And if you've been at it, I do think that these 6-9 months, maybe the first 3-4 months were a little bit all over the place. The next 6 months have been a lot more constructive, lot sharper. And I know for a fact today that we have a better idea of what we will do and what we won't do. And we are far clearer with our partners on new conversations so that their time is also better spent and invested. So I think that's been a clarifying. So I call this as a clarifying period for many of us, including strategy, including capital allocation, time allocation, where you're going to invest in bandwidth, infrastructure, technology. Because if you give me a 3-5 year view, which frankly, I'm a lot more confident about it today than I was perhaps 2 years ago on where, technology and financial services convergence will happen and what will be the impact on our consumers and businesses. I'm a lot more confident today and a lot surer than I was maybe 2, 3 years ago. And therefore, we can place our investments and bets with a lot more confidence on where we want to be.
Yeah, I think you answered it much better than my question. Actually, saying that the first 3 months was inward, but today, right? Let's say JFM quarter. This is a time to be investing in partnerships, and it
Sure.
is counterintuitive because I think to say that now is the time to think about your partners, I think is very forward thinking. Now, in 2021, everyone's talking about digital portfolio quality. Now, we typically see that digital consumers tend to perform better. Is there any thoughts or views you can share with us on digital portfolio going into 2021?
Connection problem, but just give it a minute. Hi, Adil, you're back.
Uh, yeah, Rajiv, I can hear you. Did you hear my question?
Yeah, you were mentioning about digital portfolio quality, whether the portfolios will stack up better in the years to come.
Absolutely. And because it's a very topical question with everyone building strategy for FY22, is there any view you'd like to share, given that you've seen this across partners across years?
Hi, Adil, can you hear me? I am. Maybe I should just continue. So I think the entire macro environment and the sub-segment environment will be very critical for the success and the positive outcomes for our customers and our small businesses. And clearly, if you ask me, the last 9, 10 months, and people have varying appellations for this, I think the closest, which I think is the K-shaped economy. So there are businesses which have done extremely well, consumers have done extremely well, and I think small businesses have borne the brunt of the last 9 months. I do think they will come back, but their entire business models will get tweaked a little bit. So if you think about this digital being a key driver, I think it has to become more broad based. It has to become easier for many segments which were not used to it. They can consume it faster and better. And I think India is well poised for that. Now, I think we'll have to watch the next 3, 6 months very carefully, judiciously, because when an economy is shut down because of necessary lockdowns, it takes time for it to come back to a rhythm, and where all the interlocking pieces become operational. And I think that is happening, but it'll become better and better. So from a long term perspective, Adil, I really think that India is well positioned as long as the actors in the financial ecosystem do the right things from a customer perspective. Uh, the whole standards are there. I mean, you yourself have been a big proponent of, KYC, CKYC, etc. I think we are getting into those standards where costs of access and cost of intermediation are dropping dramatically. Data has become not just a resource to monetize, but actually a strategic tool to be able to provide low cost services, in time services, predictable services to a larger and larger population. So I think we have to leverage these trends. Now, there will be some ups and downs over the next 3, 6 months. We're not deterred by it. I think we have to take a 3, 5 year view. And I'm just very, very clear that that 3, 5 year view is now a lot surer to me than it was 2-3 years ago as to where the future of financial services plus technology will lie. Yeah, some portfolios will be challenged, but some portfolios will do extremely well. So payments has been fantastic for everybody. Cards, as you know, has come back quite sharply. Uh, Consumer lending, consumer durables in parts have done well, but has the whole, jobs, salary, it'll take some time for things to become normalized. And I think we should be prepared for it. But like I said, we've gone through the worst. We've gone through the most tough time in our, at least in our career. And I think as an industry, we are far stronger, better capitalized, and hopefully all the measures which we are talking about now as a system, regulatory, customer service, governance, redressal, will only make us stronger in the next 3-5 years to really address the larger shift towards digitally driven consumption.
Fantastic, and thank you for answering that. And I dropped and came back. But did you comment on how is digital performing in terms of its portfolio? Is it? Are you seeing any clear trends at this stage before we move to the next topic?
Yeah, I can reiterate some aspects. So clearly, I mean, when we define digital, really, we're talking about payments. Payments has done extremely well. And that has now gone to many other segments which were not used to it. I mean, so senior citizens are using payments on WhatsApp, on mobile apps, and they're using WhatsApp for information. Small businesses are getting wired up. We're seeing a lot of consumption around it. Digital lending for some segments is back. But again, Adil, I'm a little bit old-fashioned here. I think lending is lending. Digital is really a way to increase your understanding of the customer, deliver better, monitor better. And I think as our customers get more and more driven by digital tools, and that's going to be a trend in India. So digitally enabled lending is going to become more and more important. Now, some portfolios may not do well for the next 3-6 months, but that's the nature of the market because it's still an uneven. But overall, the trend lines are quite positive.
Got it. So moving to our last set of questions. Now, when we look forward, what are the areas you're going to prioritize in the coming year, Rajiv? What are some of the things you would like to see as results in 2021?
So I think we are focused, Adil. We have a few focus areas. We partner on payments, which I think is a lot more addressed now. We have a big partnerships on the consumer side. Whether it's cards or personal loans. I think those are areas we'll continue focusing on. Small business, in my view, is going to be a very exciting area. I know it's quite 3-5 year view. Small business segments, new businesses formed over the last 5-10 years, new businesses formed in the last 1 year, and many traditional businesses adopting digital to actually become closer to their customers, reduce their cost of operations. And I really don't mean just fully digital, even assisted digital. We're doing a lot of work on retail using assisted digital. I think these will be the areas of focus. And one very large segment, Adil, is the entire hitherto financially excluded segment. And I count small businesses there, but what we do in rural areas and semi-urban areas, which are, have been low penetration of financial services of all types, including credit extension. How do they become mainstream? And I think they were already becoming close to mainstream. And our view is that with a lot of effort from people like us, banks, NBFCs, people like yourselves, they should also have access to the best insurance products, the best investment products, the best personal finance products, and their business finance products. And technology, marketplaces like yourselves, data, which is going to become more and more important to understand these customers, is going to drive financial services adoption even more. So if you ask me, that's the most exciting area, which may not appear by way of numbers in the next 6 months, but clearly, if you took a 3-5 year view, it is almost like where we were in 2010 to 15, and that could become a very large part of India's financial services marketplace.
Got it. Got it. Now, amidst all this opportunity, you've spoken about governance in partnership. The RBI just set up, hot off the press, a digital loan app working group. How should
Yeah.
we be thinking about it, right? There are bankers listening, there are fintechs listening. You've dealt and seen these kinds of issues over decades. How should we think about it, Rajiv?
So I think, look, in some manner, these issues are not new, except because when you put digital and loan apps, this acceleration and the speed becomes even far higher. And I think that's been one of the areas where I think there has to be a lot of thought given that when you are, working in a partnership, what is the level of governance your partner has, who clearly is bringing a very unique consumer or business insight. And I'm right now talking about the formal market, because we don't intend working with anybody and everybody who just builds a loan app. It has to be something which has to be unique, something which has governance within the company from a capital structure, board, technology, the CRO functions. All of these are important. So assuming all those meet the hygiene test for somebody like RBL, what is that consumer insight or small business insight you have, and how are you sustaining it? What's your capital structure like? And is this something we'd like to do long term anyway, so that our partnership is well spent? So all of these areas have to be addressed, and I think all the regulator will basically demand is many of these things become codified, auditable, monitorable, and you keep improving them. I think this is something we all learned, that unbridled growth leads to regulations ultimately. So good entities, well governed entities, which absorb and assume these requirements early on, even before they become the norm, actually will survive and become far better entities with better reputations from a customer perspective, and therefore a regulatory perspective. And I think that learning curve has become accentuated, sharper, which is what I alluded to in my first comment, that the first 5 years of fintech, 2010 to 15, brought these learnings to fore. And I think these will become very, very critical. So if anybody wants to build a highly successful business, and there's tremendous opportunity to do it, please work as if you're a regulated entity today. Because if you do that, then your ability to scale up, build a brand, build meaningful partnerships with banks and NBFCs, especially for payments and lending, will become far, far easier to structure, scale up, monitor, govern, etc., even for the regulator and a consumer at the same time.
Yeah, I think that's great guidance. Prepare as if you were a regulated entity. And, Rajiv, there's so much I could speak about with you, given that, you've seen capital raises, you've seen building an institution, taking it to IPO, growing. But in the paucity of time, right? I think we're almost at the end of this discussion, but I want to ask you one question. Now, in all interactions, right, you're very open. You want to hear what other people much smaller and much younger than you are doing. You have a philosophy of learning and lifelong learning. Just help the audience understand how you approach learning for yourself.
Yeah, so I think, Adil, this is something which again all of us have in great degree. I think if we have to, in an environment like this, plus personally as well. And I think, I can very, very squarely say that all I'm saying today is a result of what we learned in the first 5 years from people like you and the hundreds others we worked with, we listened to. Because, I mean, there's nothing called proprietary. There's nothing called, we're not building rockets. We are serving a customer whose needs and outcomes and demands are evolving, and they should evolve to the point that we all need to work together. Yes, there are certain requirements which we will have to first invest in ourselves from a regulatory perspective. So, therefore, I think learning in business, learning from people like yourselves and others, as well as from others. I mean, so, yesterday's test match was a great teaching moment, not just for sports, but for many, many, many aspects of how we run our families, society, businesses. And this is in India, actually, which is the India which expects a lot, which works hard a lot. So I think these are all learning moments, and then your ability to use your experience and from these moments to connect the dots and build a framework for yourself as an individual, for your group, for your organization, for the society, I think this is to me the only way you can stay relevant. And there is nothing called 100% perfection. I think you keep improving, and this is where I like the startup these are terms I've picked up by talking to many of you, and you keep improving. Yes, timing is a lot, but you can improve the probability of getting it right by listening to people, and more importantly, listening to people's problems, challenges, and failures, because you should not repeat the same. And all of us are guilty of that, including I. If I go back in my 30 plus years, probably I've seen this movie several times, but you do end up making the same mistake. So that's what one thing one should learn from. And I think the good part is India is going through what I would call a huge amount of changes. And what somebody told me is that there's an external clock speed, which is people like yourselves, the consumers, the businesses. The expectations are huge, and there's an internal clock speed of the organization, which even startups become bureaucratic. uh, your own internal clock speed. How do you keep adjusting to that? And the only way is you reach out, you learn, you connect the dots, and hopefully on a probabilistic basis you'll come out better and better over time, and you'll make many people winners in this process. It's not just about yourself.
Thank you, Rajiv, for sharing your insightful thoughts on this expert speak. I have learned a lot, not only about your learnings, but also about your philosophy and how you approach these partnerships. Thank you so much for your time.
Thanks, Adil, for having me, and all the best to all of you. Yeah.
Look forward to continuing the conversation. Thank you and goodbye,
Thank you.
everyone.
Bye bye.